Thank you, Mr. Chairman. Welcome, Madam Secretary.
Thank you.
Madam Secretary, isn't it a fact that the President's proposed budget for next fiscal year is $500 billion more than this fiscal year?
On the spending side?
Yes. That's what a budget is.
Yeah. It is about $400 billion.
It's about $500 billion
in
more,
outlays.
right?
It's about what?
$500 billion more, right?
About that.
Isn't it a fact that since 2019 until today, I'm not including the extra $500 billion that y'all want to spend, since 2019 through today, U.S. population has increased 1.8%, and the federal government's budget is up 55%. Isn't that a fact?
Well, we had a pandemic.
Isn't that a fact, though? Are my numbers
I'm not,
right?
I don't know those numbers.
You don't know? You never looked at that?
I don't have those numbers in my head. I'm not disputing them.
Okay. Isn't it a fact that the President's proposed budget proposes $4.7 trillion in new taxes?
It does propose significant additional taxes, yes.
4.7 trillion?
Something like that, yes.
Okay. You talked about reducing deficit. Isn't it a fact that under President Biden's proposed budget, that gross debt will rise from $32.7 trillion at the close of this year to $51 trillion by 2033?
I'm sorry, what number did you give me for?
The President's proposed budget will increase gross debt from $33 trillion at the close of this year to $51 trillion in 2033. Isn't that correct?
Well, debt held by the public, which is...
No, ma'am, that's gross debt. Isn't that a fact?
That's probably a fact.
So you haven't reduced the deficit, have you?
The deficit, the debt and deficits are reduced by the president's budget.
How can you go from $33 trillion to $51 trillion and call that a reduction in the deficit?
Because that's a calculation for which you need a baseline, and then you compare the budget and the deficits and debt in the budget with a baseline in which there are none of the changes either in revenues or in spending that are proposed in the budget.
Here's my baseline. At the end of this year, we project, people a lot smarter than me, probably not than you, but smarter than me, say that gross debt's $33 trillion. They say if the president's budget is implemented by 2033, it'll be $51 trillion. Isn't that a fact?
If the president's budget is not implemented and none of the changes are made, it will be worse than that. And so the president's budget has improved the fiscal outlook relative to what we would have without the president's proposals.
Even though it raises gross debt from $33 trillion to $51 trillion, you say that's an improvement?
It is an improvement because it raises taxes by more, and it leads to...
That includes taxes. In what world is that an improvement, other than Washington and La La Land?
It's an improvement in that the revenue increases far exceed proposed investments.
Okay. All right, let me ask you this. Isn't it a fact that in January of 2019, the Federal Reserve issued a warning to Silicon Valley Bank over its risk management systems?
I have no idea. I'm not responsible in any way.
But you're in charge of the banking bailouts and the crisis, right?
I am not involved in banking supervision, and I don't have access to any information about the supervision of Silicon Valley Bank.
Okay, so you don't know whether or not the Fed, you haven't looked to see whether or not the Fed issued a warning, 4 years ago to the bank over its risk management systems?
That's not public information, and it's not
Sure it is. It's in the
information.
Wall Street Journal.
Well, it may be in the Wall Street Journal, but it's not public information, and it's not information that I have access to.
Well, I'll give you a copy of this article.
I've read the article, but
The Fed issued a matter requiring attention. And it said your risk management practices are terrible and you need to improve them.
that is what the article says.
Right. Isn't it a fact that months before SVB went under, that the bank disclosed that its mark-to-market value of its bonds was $16 billion less than their balance sheet value?
They did make such a statement.
Did the people at the Federal Reserve just not read it?
I'm not at the Federal Reserve.
I know.
I was at the Federal Reserve.
But you're at the Treasury, and you're in charge of the banking crisis. Let me ask you.
I am not in charge of the supervision of the bank.
Let me ask you this. Senator Hinder talked about the 2018 amendments to the Dodd-Frank Act. Isn't it a fact? Now, SVB was not stress tested in 2022. 34 banks were. Here's the Fed's report. Isn't it a fact that if SVB had been stress tested, it would have passed?
Stress tests look at capital of a bank.
Here's the yes, ma'am, under the stress test. Isn't it a fact that SVB would have passed?
I don't know. It wasn't stress tested.
You need to look into that, Madam Secretary.
This is not my job. This is the Federal Reserve's job.
Okay, isn't it a fact that when the Federal Reserve stress tested in 2022, it only stress tested credit risk, it didn't stress test duration risk? Isn't that a fact?
I believe the stress tests in general partially address and take account of interest rate
No,
risk.
ma'am. I've read it. Here it is, bigger than Dallas.
Well, to the extent that there are assets held in an available for sale portfolio that would suffer losses due to changing interest rates, that would be captured in the bank's
No, ma'am, it's not there. I've read it. Madam Secretary, I thought I understood your proposed budget. I want to walk you through it again. Isn't it a fact that the president's proposed budget increases spending by $500 billion over the current budget?
There is an increase in 24 over 23 by about that much
Okay.
in outlays.
Isn't it a fact that the president's budget proposes new taxes of $4.7 trillion?
That's probably right, yes.
Okay. And isn't it a fact, I'm talking about gross debt now, not public, not debt held by the public. Isn't it a fact that under the president's proposed budget, gross debt would go from $32.7 trillion at the close of this year to $50.7 trillion by 2033?
Debt subject to statutory limitation, yes, would go, as you said.
So the president's budget would increase our debt by $18 trillion.
Which is $3 trillion less
Right.
than it would increase without the proposals in the president's budget.
So what the president's saying is, these are my words, not his, because of his budget, we're going to have 3 heart attacks and a stroke instead of 4 heart attacks and a stroke.
Well, I would not agree that we're going to have 3 heart attacks and a stroke because we have a very large economy, and while the numbers that you cite are very big numbers, the size of our economy is also extremely large. And I think a better metric for assessing what the impact of the budget is on our economy and whether or not it's manageable is real net interest on the real net interest payments that we have to make relative to the size of our economy. And those real net interest payments run throughout the 10 years of the budget at around or under 1% of GDP, which is historically normal. So debt is increasing, the size of the economy is increasing, interest rates are moving back toward more normal levels after a period of many years in which they were exceptionally low. And yet, overall, what you see in this budget is real net interest on the debt stabilizing at about 1% of GDP, which is a manageable and historically normal number.
So $51 trillion of debt up from $33 trillion doesn't bother you?
I think the path that is set out in the president's budget is fiscally sustainable.
Okay. Well, how much debt is too much? Tell me that.
Well, I just gave you the metric that I think is best for assessing fiscal sustainability.
Okay. Let me ask it in simpler terms. I didn't follow you there.
It's
What percentage of our GDP, what debt as a percentage of our GDP is too much?
so it depends on what interest rates are. And real interest rates have been extremely low. This budget and previous budgets have projected that they would move up toward more normal levels over time, but certainly not the levels that we saw several decades ago. And
Could you
we
just
can't
answer my
judge-
question, Madam Secretary? What percentage of our debt of our GDP is too much?
Well, this budget has debt held by the public moving up to around 109% of GDP.
And that's not too much, in your opinion?
Historically, it's a high level, but on the other hand, interest rates, real interest rates, have moved down substantially in recent decades. And so higher levels of debt to GDP are sustainable with lower real interest rates. And on balance, as I said, the interest burden of the debt is at a level that is quite reasonable in historic terms.
Madam Secretary, are you a Keynesian?
Well, I don't quite know what you mean by that, but I've certainly
Well,
studied
do you
Keynesian.
believe it's acceptable? Indeed, it's admirable for government when you're in a slow period, a recession, or bordering a recession, to stimulate the economy by borrowing money and spending?
It certainly can be. I certainly,
That's
there
what I
are
mean.
different.
That's what I mean by Keynesian. Do you support that?
Well, there are different tools that can be used to stimulate an economy that's in a downturn, and it's monetary policy is an alternative tool. And
But let me go back to my question. Keynes said that when you're in a recession, you can borrow money and spend it, government can, to stimulate the economy and get you out of the recession.
Well, I'm not going to make a blanket statement that I agree with that.
Well, let me ask you if you agree with this. A lot of people who say they're Keynesians, and based on what I've read of your writings, you are a Keynesian.
But
They forget the second part of what Keynes said. He said after you get out of the recession, you pay the money back. Did he not?
I don't recall that he said that.
He said it. I can show you that one too.
Well, show that to me.
I promised the chairman I wouldn't go over, and I want to yield back 2 seconds.
Thank you, Senator Kennedy. And